Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a Bitcoin / cryptocurrency market update for you, as well as some further trading lessons. If you haven't already, make sure you hit the thumbs up button, subscribe to the channel, and don't forget to check the description for a link where you can join Patreon for just $7 a month. That gives you access to more frequent updates. So one of my goals this year is to obviously do a lot more training for traders versus just doing market analysis. And the main reason for that is because nobody has a crystal ball and nobody actually knows where the market is going, whether that's the stock market or whether that's cryptocurrency. And in my own case, I think I kind of lost sight of that along the way because I had some really good calls. I was able to call the bottom of the bear market in 2018, several months in advance, within about 3 weeks. I said it would happen in late November and bottom around 3,200. Of course, that was about 3 weeks early, and it ended up bottoming around 3,100. When I made that call, the price was between 7,500 and 8,000. I made, of course, a good call in the summer of 2019 when I thought that the 61.8 was going to be the top at 13.8K, and I expected it to fall to 4K, right? And then it fell to 4K. The irony is what I had said at that time was I thought it would fall to 4K and then go to 72K. I remember specifically saying, you know, if you're a bull, don't leave hateful comments, don't get mad at me. You should be happy because if I'm right, it'll go to 4,000 and then 72,000. And, you know, it's ironic that I didn't load up like I should have back at 4K, and it looks like price is certainly trying to head towards 72K, but the more damaging part was that I got a little bit too confident thinking I knew what the market was going to do, and I kind of lost sight of the fact that trading has nothing to do with knowing where the market is going. That's not what trading is about. That might be what the movies portray, but that's not real life. In real life, traders make their money on their edge. And so I'm going to show you something. I'm going to show you a real simple formula that you can use to figure out your own edge in trading. And I'm going to show you a couple of cool things that you can do with the charts to basically be successful, right? And then we will talk a little bit about Bitcoin and what I think is going on with Bitcoin as well. So first, let's talk about edges, right? So an edge is basically what you expect to make per trade, not per winning trade, not per losing trade, but per trade. If you take 50 trades in a month, all you do is you take your number of trades times your edge, and that's your projected income. So I've got some numbers here, and this is just example numbers. I want to do easy math. Obviously, your trade fund is going to be different from my trade fund, etc. But in this example, let me blow this up a little bit, the whole spreadsheet here. Let's say that you're trading with a $100,000 trade fund, and let's say that your win rate is 50%, right? Let's say on your average winner, you're scalping, which by the way, you shouldn't do. There's better ways to trade. But let's say that you're scalping 0.5%, and when you're wrong, you're losing 0.25%. Well, you got to figure in fees, so it ends up being more like 0.4% depending on the site. Well, in a case like this, what we do is we put in our win rate, 50%, average winner 0.5%, average winner on $100,000 trades can be $500. If you're losing 50% of your trades and losing 0.4%, you're going to lose $400. The risk reward on paper is 2 to 1 because you're going for 0.5% and risking 0.25%. But in real life, because of fees, your true risk reward is more like 1.25 to 1, meaning your edge is only $50. And that's a terrible edge. When you see something like that, you know I need to adjust my trade system. This is not a great edge. Because what this means is even trading on a $100,000 budget, let's say that you take 30 trades in a month, which if you're a day trader, you're probably taking more like 90. But let's say you took 30 trades in a month. Well, 30 times 50 is only $1,500, and that's a really bad income for somebody using $100,000 to trade with, right? So what we can do is we can play with these numbers some. We can look at ways to improve our edge. What's wrong with our system, right? Well, it could be that we need to win more than 50% of our trades. That would change our edge. Let's see what happens if we won maybe 65%, so about 2/3. Well, that changes the edge to about 185. That's a pretty decent edge, right? If you're taking 30 trades a month times $185, you could certainly make a living doing that. Again, but that's on a $100,000 trade fund. And I really shouldn't say trade fund, I should say trade size, right? Because of course, with cryptocurrency, you can use leverage And if you use it responsibly, leverage is fine. It's when you start getting squirrely with it that leverage becomes a problem, right? So 185 wouldn't be bad, but that means you've got to win 2/3 of your trades. That's pretty tough to do, right? If you're scalping, it's certainly possible. I know in the past people have commented that it's very difficult or nearly impossible to win 70-80% of your trades. That's not true, right? Oftentimes, if you have a super high win rate, it's actually a bad sign. People think it's a good sign. They think, oh wow, this guy must be amazing. He's winning XYZ trades. It usually means you're taking profits too soon, right? You're closing trades early. Your nerves might be getting the best of you, so you're closing a trade for a small win versus letting that trade run and risking it turning into a loser. So let's change this. Let's say you're winning 40% of your trades. Well, now you're going to be losing money with this type of setup. But let's change this to more like real life. If you're trading with the trend, right? If you're momentum trading, where price is going up, you're looking for longs, and price is going down, you're looking for shorts, so on and so forth, right? Your winners should not be 2-to-1, right? The standard rule of thumb it's actually really damaging advice, and it cost me a lot of money over the last several years because it gets stuck in your head where you want to close these trades at 2-to-1. But if you're right and you're trading with the trend, oftentimes you're going to get more like 5-to-1, 8-to-1, 12-to-1, right? For example, let's say that you took a trade back at $4,000 on Bitcoin, right? At this point, you'd be up maybe 50-to-1 on your risk reward because you were just able to ride that trend. That trend still has not broke. The daily trend on Bitcoin has been intact for the entire last 12 months. So let's change this, and let's say that when you win, on average, you're winning, let's say 1.5%, right? And let's say that on average, when you lose, you're losing 0.53% after fees, all right? That gives you a 4-to-1 risk reward, and it's a true risk reward of about 3.75-to-1, right? When you do something like that, even though this trader, this hypothetical trader, is losing 40% of the time, if you look, now their edge is huge. It's much better than what it was, $360 per trade. And let's say this person's taking 30 trades a month. Now they're making over $10,000 a month, right? Even though they're only winning 40% of the time. Let's say they're only winning 30% of the time. They're still making about $170 per trade. They still have that edge of $170 per trade, which means if they're taking, again, 30 trades a month, that'll be about $5,400 a month profit, right? Even though of those 30 trades, they probably lose 20 and only win 10, they still make a pretty decent living as a trader. And by the way, if you're wondering about, well, how much money do I need to, risk $400 per trade? Not as much as you might think, right? The general rule of thumb in trading is 3%. I think new traders should stick to 1% or less. So we can figure out like how much your trade fund would need to be in order to take, this specific example and apply it to real life. Basically, the general rule of thumb is not to risk more than 3% per trade. I think traders should be more conservative when starting out. I think 1% is really pushing it. So what you would do is you would take $400 divided by 0.01. If you can risk $400 per trade, you need to have a $40,000 trade budget. And again, if you want to take a $100,000 trade, then all you need to do is use 2.5 leverage, right? So that's how that works. A person could be making, $170 per trade. Again, let's say they're taking 30 trades a month. That's $5,100 a month, right? On a $40,000 trade budget. It's a really good income, right? And then if they add to the trade fund, they can grow it and compound it to a certain point. So that's kind of an example of real life trading. It's not about knowing where the market is going. It's not about knowing what Bitcoin is going to be worth 6 months or a year from now. All of that stuff falls under the investing umbrella, right? Where you're talking about investments. And people who are investing typically aren't investing just off of technical analysis. They're typically investing because they believe in the asset. They believe in the underlying asset itself and the future of that asset, right? So in the case of Bitcoin, you have people who believe it really will become a store of value, etc. Now, most people who are investing in Bitcoin are not believers. They're actually just speculators who are hoping and praying that Bitcoin goes up and is worth a gajillion dollars someday. That's a story for another time, right? But as far as trading goes, this is really it. Once you can master the mathematics of trading and forget about all the noise, your life will become much simpler. So, last year I talked a lot about I don't care whether Bitcoin goes up or down because I have a small HODL portfolio with a few Bitcoin in it. And if it goes up, great, I'll make some money. If it goes down, that's fine too. I'll make money trading, right? And I started to kind of deviate away from that a little bit because it became emotionally important to me to be right. It wasn't about the money side. It was about the ego side, about wanting to be right, and that's stupid, right? When you want to be right so bad, you start looking for things in the charts that justify your position, and then you end up missing a lot of easy trades. So that's kind of where I wanted to start at. And where I wanted to go from there is I actually want to go over to a Bitcoin chart and just talk about some stuff that happened after I shot my last video, which was about a week ago now. I believe it was Friday, maybe even Saturday when I shot that video. And I said that I was, waiting for it to either break the all-time high or I was waiting for it to take out the swing low. And I think I wrapped that video up by saying that, I was leaning toward the bearish side. So I want to talk about that a little bit and kind of talk about some things that happened right after I shot that video that changed my stance and made me look for the bull side. All right. So in case somebody thinks, oh no, that's, you're just saying that now you didn't change. You were short the whole time. I posted all this on social media. So hopefully you're following me on Twitter or in my Facebook group because this was posted publicly before price ran up $5,000. All right. So when I shot the last video, I was looking at two things. I was looking at Fibonacci retracements from the all-time high to the swing low, and I had said that it came up and tested this golden pocket, so it was potentially starting a downtrend that was going to look something like this, right? That was one scenario. And by the way, if you had shorted that golden pocket, it was a pretty good move, about 12% down you could have made. But what happened after I shot that video was Bitcoin put in a fake head and shoulders, right? And in Bitcoin's case, in other markets as well, but especially with Bitcoin, these are oftentimes fake. If they're at the very top of a move, they're not so fake, right? So if it was way over here, I would trust it a lot more. But when you get them after a move down and it's like on a dead cat bounce kind of thing, a lot of times it's not a dead cat bounce at all. A lot of times it's going to be a liquidity play. What I mean by that is there are people, institutions, people, whatever you want to call them, who are basically waiting to buy Bitcoin on a dip. But if they're buying larger amounts of Bitcoin, they need liquidity in order to buy that. And the easiest way to do that is to wait for bears to try to short Bitcoin, which requires them to sell it, and they'll buy right into those selling orders, those short orders, right? So when you get a head and shoulders like this, after one of these small little, you get a downtrend and then a bounce, more often than not, they're going to break to the upside. What's going to happen, they're going to come down, and this is going to act as a bear trap. And what you actually want to be doing, if you're following the quote-unquote textbook, head and shoulders are supposed to be bearish and you're supposed to short them. But in reality, it's important to realize that it's where they occur, right? A head and shoulders is not equal. It's different depending on where it actually occurs in the price action. So down here, you got the fake head and shoulders. This acted as a liquidity pool down here. And then what you had, and we talked about this in the last video, this was coming off of this golden pocket touch. So it was potentially going to be a new uptrend that looked like this, right? So you have this. If this head and shoulders wasn't enough for you to long it, and if that golden pocket touch wasn't enough for you to long it, which those are pretty good reasons by themselves, you also had a perfect, you had a perfect double bottom, right? And if that wasn't enough reason for you to look for long positions, then let's get rid of everything. You actually had a perfect retest of the neckline of that double bottom. Those are all really bullish signals. And so, if you're a trader, this was the spot where you'd want to be looking for long positions and looking for some type of move up. And the easiest way to set up your trade is to simply, when it comes down over here, you've got this red candle closes right above that retest. You can slap an entry on there and you can look for this last swing or this last pivot to be your stop loss, because the way this works is if this breaks through this and goes down through this, this is probably not a new uptrend. It's probably going to continue moving down, right? Momentum's going to shift. But as long as it doesn't do that, it stands to reason that it should go up. And so what you end up with is you end up with a trade with a risk reward that looks something like this, right? So that's 2 to 1 right there. Now remember in that example I just showed you with the spreadsheet, I said 2 to 1 is bad because it makes you want to take profits right when it hits it. This is what I'm talking about, right? When this came up here and hit this, yeah, it's 2 to 1. You could exit your trade for a win there, but look how much you would have missed, right? So an easier thing to do when you're trading, or I don't know if it's easier, it's actually harder because it takes a lot of discipline, but is to actually set your stop losses at the pivots. So for example, maybe take half off the table right there. Now you've got 2 to 1 and you've got half your trade left. And what happens then, let's just say this thing starts going back down, where you move your stop to this pivot because this is the new pivot, right? So worst case, you're going to make a nice profit on half your trade and you're going to break even on the second half, right? But on the flip side, every time this thing moves up, comes down and moves back up and puts on a new high, you just keep moving your stop higher and higher. So in this case, you know, your stop started down here, then your stop moved to this level, right, which was your entry, and then put in this new pivot low here. So now this is your new stop loss. And then put in this new pivot here. So this is your new stop loss. And if you do that and you stay disciplined with it, you can ride the trend until the trend actually breaks. And in this case, I don't know, where this is going. Again, I don't have a crystal ball, right? I always look for this to be like the top, right? The top. It's going to be the top because it's so overextended. But the reality is there's really no reason to rush at it and close a trade right here, right? Because it hasn't taken out this last low. So this may take out this low, and if it did, then this trader would have made 10.94% on the first half, and they'd end up making about 9% on the second half. Or this could continue going up, and they could end up making 15, 20, 30, 40, 50% on that trade, right? So that's the way it works. That's a trade example, and I know it doesn't do anything for you as far as, well, what's Bitcoin doing right now, James? Well, I don't know what Bitcoin's doing right now. I don't see a setup on the chart right now, right? This was all stuff that actually happened in the chart. And so a lot of times when you're looking at charts and you're looking at all these different trades and things, it's very difficult to sit down and do a video every day and actually have anything meaningful to talk about. In 2019, I shot all these videos. I did videos every single day. And most of, I guess the last half of 2019, I was doing like a lot of videos. But really, when you go back and I went back and I looked through them, it was really just the same thing over and over. Me saying over and over, I'm waiting for 4,000. I'm waiting for 4,000. It wasn't really, I don't know, people seem to like them, but it seemed kind of, redundant, like beating a dead horse. So when it comes to trading, this is the stuff that I'm looking for, right? I'm simply looking for these patterns. And it's not just the pattern itself, it's where they occur at, right? So this was an example of that fake head and shoulders, right? With the liquidity and everything and the double bottom. But watch this. If you put it on a 12-hour chart, it actually had an inverse head and shoulders. You had your left shoulder, right, down, up, your head, and your right shoulder. So if you look at that, obviously that was one more reason to be bullish, right? All these things start painting a picture together. But on the flip side, if you go back and you find a head and shoulders that occurs at the top of a move, so for example, say like in 2020, left shoulder, head, right shoulder, that's not a liquidity grab. That was an actual head and shoulders that when it broke through, that was a bearish signal because it was at the top of this move. It wasn't moving down and then doing this, right? It was moving up and doing this. So video's about 20 minutes. I want to talk a little bit about the analysis of Bitcoin. That was all trading stuff. So here's the thing about Bitcoin right now. On the 3-day chart, if we pull up RSI on here, we're going to see that it actually did print a pretty nice W, right? This is actually down, up, down, up. That's a confirmed W or a double bottom on RSI. So that's bullish in nature, but it's really, really overextended, and we have this running bearish divergence. So, I am skeptical of how high this thing can get. You've got your high here, much lower high, and we're trying to print another lower high. Price is kind of messing around this level. Could end up being a double top. It's very possible. If you look back at the summer of 2019, we got a similar price action and then nearly double topped and then down it went. But it could also be something more like this back here, right? The summer of 2017, where you got this very similar type of wonky M with a retest of the neckline, a correction or a sideways movement, and then, the blow off top that lasted about 6 months or so. So I don't see anything right now that's making me go, oh man, I just want to sell all my remaining cryptocurrency. And I probably won't sell it unless there's something really obvious in the charts. I still expect that at some point in the future, Bitcoin probably will trade between $10,000 and $12,000. But I've taken so much profits now that what I have left, which is still a decent amount of cryptocurrency, I probably will just hold it long term. So I'm really not looking for reasons to cash out. I'm just kind of riding it with what I have left and then trading in the meantime. I am trading for US dollars. I am not trading for Bitcoin, right? Because I do feel like, it's pretty overextended and everything. If you look at the weekly chart, again, same deal. We've got that wonky double top. This could theoretically be a bearish retest of that neckline before more downside, so be aware of that if things start to move down. And again, when I say move down, it doesn't necessarily mean that Bitcoin is going to crash to $10,000 right now. When you look at this last cycle, this last bear cycle, it lasted about 9 months. Yeah, it did eventually hit that target down around 4K, but it took 9 months to do it, and there was a lot of action, up and down action in between there. So when I'm talking about this, pulling back here, I don't necessarily think it's going to go straight to 10K or 12K, right? It could be that this is still a bull cycle and that there's still gas left in the tank, right? It could be that this finally corrects back down to around this 50 to 55 RSI and then just keeps going up. So, by no means am I saying, hey, this is a cycle top. I don't know if it is or not, right? I'm simply saying that it's overdue for a correction, and then how it acts when and if it corrects will kind of tell us more information about what the future holds. If we look at a monthly chart, this has gobbled up almost all of this wick, so that's pretty interesting. It's early in the month, so obviously it could retrace back. If we did end up with some type of tweezer tops, that would be a pretty bearish signal. But let's wait until the month closes before we worry too much about it. If we look at a daily chart, again, my major concern on the daily is just want to make sure this doesn't end up being a double top. We'll know it's a double top if it breaks and closes below this level around 43K, right? Only then do we have to really say, okay, let's get bearish. And when I say bearish, like, looking for major downside. Otherwise, this could just be, consolidating a little bit, waiting to gain strength before it punches through. And if it punches through, there's no resistances above that. So, that's when we can start talking about things like this trend extension, which points up towards 72,000, right? Let's line that up. See, so that would be your move, your pullback, and then your move up towards 72K would look something like that if it happens. Right now, it's found some resistance right at the 50 level, which is also, basically this all-time high. So if it breaks through there, the first level I'd be looking for is 61K. If it breaks that, the next level is 66K. And then if it breaks that, the next level is 72K. And from there, that's where things could get really interesting because, again, my original prediction back in 2019 was, 4K and then 72K, and that was based on, looking at the returns of previous bull cycles. Each bull cycle returns about 20% of the previous bull cycle in terms of, growth from that bear cycle bottom. So that's kind of what that was based off of. But yeah, overall, I think Bitcoin has been a pretty interesting asset this year. And I think that for those people that, are Bitcoin believers, I think it's great. Hopefully people made a bunch of money. Hopefully they did at least lock some of those profits up, or at least set stop losses to make sure that if it does go back and take out this low, that they're not stuck holding the bag. And I think overall, I guess my message to people is just be careful, right? There's a lot of people doing what I call YOLO trading, right? Where they're going all in, all in, all in, all in. And it seems like a great idea because you can take a trade account with maybe $1,000 and you win a couple of trades and now it's 5,000. Then you go all in, you win a couple of trades and now it's 50,000. And you go all in and you win a couple of trades and now it's 200,000. And you're feeling like king of the world. But when you trade that way, you only have to lose once and you're done. You've lost everything, right? You can build an account up to millions of dollars and lose it all. And there have been people who've done that. I had a kid in my Discord, and I say kid because he was 20, and he was super, super bullish on Bitcoin. And I'm trying to explain to him that Bitcoin has not proven itself as a store of value. My business partner is trying to explain to him it's not a store of value. And he's telling us that we're morons, right? That we just don't understand it, that his generation is basically smarter than us, because me and my business partner are both, technically we're millennials, because I was born in the early 80s. So was my business partner. But, whatever. He thought he was smarter. He thought his people smarter. But the reality is, we're just people who have been through this before, and we're trying to protect other people from it. I went back and looked at my altcoins this week. It's the first time I've done it in quite a while. I went back and looked at all the altcoins that I have. I talked about that alt portfolio that was like 2 Bitcoin worth of alts, 2 Bitcoin worth of alts. Well, it actually cost me 12 Bitcoin to buy all those alts back in the day, right? When I was doing what everybody is doing now, when I was just like chasing the gains. A lot of those coins I was up 10x, 20x, 30x, 40x. Some of them I was up 100x on. And I just didn't take profits the way I should have, because I bought into the narrative that they were going to go up forever. And now I have alts that are worth, 90% less today than what they were worth. And again, we're talking about, 10 or 12 Bitcoin difference at today's prices. We're talking about that was a $500,000 mistake. My business partner has a very similar story, where he had one particular coin that he wrote up and wrote it back down almost $600,000. So when I do my videos and I come off as bearish, it really is from a place of just, wanting to protect people as much as possible and not wanting to be part of the problem. There were a lot of overly bullish people in 2017 who caused a lot of people a lot of grief. And the same thing happened in 2019. And it's unfortunate that in this space that those people have done nothing but be bullish and never stopped being bullish, and now they look like they're geniuses, or they look, intelligent, because they got lucky, because the market eventually went up. But for all the people who listened to them along the way, either they were leveraged long and they lost all their money, or they were spot long and it cost them huge an opportunity cost. It's like people will say, well, if you just hold long enough, you'll be in profit. Sure, that's been the case so far, and let's assume that it will always be the case. But what's the difference in putting $50,000 in a Bitcoin at 20K and buying 2.5 Bitcoin that are now worth, 125K or whatever it is? Imagine that same person had waited until the proper time to buy Bitcoin, put that same 50K in, but instead of getting 2.5 Bitcoin for it, they were able to buy, let's say 15 Bitcoin for it, right? Well, now that 15 Bitcoin is worth, $750,000 to $800,000, you're talking a difference, a life-changing difference, right? So my thing is, I don't chase markets. If you want to chase markets, that's your business. I'm not your financial advisor. But when I do videos, always keep in mind that I'm not basing my future on what Bitcoin does. I do have some cryptocurrency, and if it continues going up, it's feasible that it could be worth a serious amount of money someday. It's already worth a pretty decent chunk of money, right? But I'm not banking on it. That's not my hopes and dreams, right? I prefer to stick to the charts and prefer to make my money on the moves themselves. So with all that being said, I'm going to be doing some special announcements probably over the next week or so. Got some new business stuff I'm getting into. We've got some paperwork and stuff that we've got to get filed. We're actually going to be becoming a broker in Forex and some stuff. So I will be talking about that over the next week or two. So if you're interested in learning to trade from myself and my business partner, who's also a professional trader, make sure you subscribe to the channel. If you're not, we'll be making some announcements on YouTube, and we'll be offering a select group of people an opportunity to train with us, no charge. So definitely keep an eye out if you're interested in. It's Forex trading, just a heads up. So it's not cryptocurrency trading, but the same stuff works in all the different markets. The reason it's Forex based is because cryptocurrency doesn't have the liquidity to do the trades that we'd like to do. For example, today, my business partner took a $4 million trade, right? And you can do that on Forex without worrying about slippage and all that stuff, but you try to do a $4 million trade on Bitcoin and it's tricky, right? So with all that being said, make sure you subscribe if you haven't already. And as always, please remember that I am literally some guy sitting in a spare bedroom. So I've been wrong before. I guarantee I'll be wrong again. You should always go out there and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, Forex, precious metals, rocks, whatever it is. All right. So again, this is James with Crypto Common Sense, reminding you to please trade safe.